Hello guys. Good evening from here, and I hope you guys are doing well. Yeah, and I hope things are going well for you guys also. So it's been long I've posted, and been busy lately on a lot of stuff, cause trading is not the only thing I do. So that is the reason why I am a swing trader, and I think that's the best thing to do for me. I don't know about you, but I think swing trading is just the best. So I am going to be sharing a live trade that I took on vix10. So right here, this was the analysis before. You can go to my Facebook page and see every content I post on Facebook. I would like to see you follow me on Facebook, and then you see my content right here. So this is my page, still the same name on YouTube, Demetrius FS Trader, and you can see many stuff that I post on Facebook. So right here, this is the analysis before it was triggered. So we have vix10 before 6 hour time frame, and then we have the effect right here. I think it was yesterday. So we are going to go into the reef, and right here we move to our vix10. So this is the progress right now as I'm swinging the trade and I'm approaching TP. I would have gone sniper right here. I would have gone sniper right here, but I wasn't on the chart when this was triggered, so I ran down to lower time frame to have my entries. So um, right here, this was the analysis right here, and like I always say, we to start from the higher time frame. Right, so first thing first, we do notice that vix10. So I would like to delete everything I drew here, so I'll delete all of them. And then we take off my trade so I won't mistakenly touch it. So first thing first, we are on our monthly time frame right here. So we can see that the overall trend is what, bearish, and I'm still looking at this area right here, still on this area on the monthly time frame. So I will just ignore that. So first thing first, we notice that the price traded lower right here, and when it traded lower, we saw that in the range we saw a set stop taken out from here, right? So no, let's just say that a set stop was printed right here. So a swing low we have right here, and after that swing low, you can see the price put higher to give us what, a swing high right here, right? So after that range high was found, we noticed that the price traded lower, and what did they attack? We see it attack sell stop, and it took liquidity from the sell stops, and then when I get to see it trade higher. Right now, when I noticed this market traded higher, I noticed that we had a stop hunt right here and not a structural break after we have price taking sell stop from here and printing the other block. So to me, this other block is not valid since we did not get to see a structural break right here, right? Just price grabbing liquidity, resting on this high, taking out buy stops. So seeing that, I quickly run down to my weekly time frame, and I noticed what I was talking you guys, what I said right here. So right here, this will happen, and we see price put back and use that high as an area of resistance to start selling lower. Right, so that is, by the way, I am not seeing this as a valid area of demand for some reasons that we did not see a structural break, and I can't find anything right here. Now we are in a range high and low. So the first range was taken out from here, right? We have buy side liquidity pool. We have buy side liquidity pool taken out from here. So we do know that we are in a range high and low. And the idea of range highs and low, it means that price tends to grab liquidity from both high and low. And if it first take liquidity from the buy side, it will deliver to the sell side, and vice versa. So we have buy side liquidity pool right here. So we have buy side liquidity pool right here. So after that, we now get to find our sell side liquidity pool resting right here. So we have sell side liquidity pool right there. So price traded backwards, grab buy side liquidity pool, then deliver the price to where sell side liquidity pool. So we have this range high and we have this range low resting right here. So the first thing first was that after creating a low, price traded backwards higher to take what buy side, and it hunted that high, right? It hunted it twice before we get to see trade lower, and it reversed and then gave us a low. This is not a structure, okay? Even this right here, this is a compressed liquidity, area of liquidity, and it is not a structure. This is just a choppy market. So right here, I am not focused on what is right here. So that was when I was on my daily time frame, right? Because my analysis are mostly taken from my daily time frame. So right here, right? So I notice this area, previous buy stop was taken out, was used as area resistance. Now before I get to enter the area, I notice my high right here. The structure was made, so have a high and I have a low. So we have this high right here, and I have a low right here. Then I now have from my high, I have from my low, I have the impulsive move up, right? That broke this high and gave us a new high. So that is our high, and from our high, we have price gave us, most traders looking at this has an area of other block to buy from, or an area of demand to buy from. So they have this as the other block. Now price gave a high, right? And price didn't tap into this other block, right? So it gave us a low, right? And it gave us liquidity right there. So we have high, low, high, and we have a low that didn't tap the other block, but it's traded into an imbalance, and it gave a liquidity. And also price traded higher, right? So as it traded higher, it failed to give us a new high. So what we're having right here, we're having a failed high, right? So that is a failed high. And after the failed high, like I always tell you guys, I teach also in the mentorship, that a single break does not confirm a structural change. You have to see two structural breaks, right? So now right here, first thing first, and I talk about the smart money setup. I keep on repeating that. You can go to my previous videos and watch it. I'll keep on repeating that. So we have a failed high right here, right? So I will label that as my failed high. Okay, so failed high, and after my failed high, what was the first one I noticed? I have my change of character right here, right? Now when I see a change of character, it does not confirm that the market has changed from bullish to bearish. I will have to see, first of all, this demand broken, and to give me another confluence, which is what? A break in market structure. So right here we have a break in market structure, BMS right here, that broke this low. So we have change of character, we have break in market structure, and after, you can still say right here, since this high was responsible to give us this low, then the major low we're looking to see that will be broken is this low right here. So this low, I can still look that as an internal structural break, and why we see that and say that we're having a break of structure. But that does not confirm my structural change until I see my major swing low to be broken to give me a break of market structure. These two things are different, break of structure and break of market structure. Alright, so now after seeing my failed high, what am I to mark? I am to mark my area of order block right here, because that was the supply, that was the order block that was printed at the failed high to give me a general character and also a break in market structure. You can still say you're having a shift in market structure. So it is still the same, failed high right here. Now, after my failed high was given, what was the next thing I am to look for? Right, the next thing to look for is my liquidity assessment. So where's my liquidity assessment? This is right here, and you can see it is very close to my POI right there. So that's my first liquidity assessment, and then my second liquidity assessment was resting right here. So I am going to label that as my area where I'm having faker zones. So that means retail traders at this area, they'll be waiting to sell at this area, and why the institution will be above them to for that stop loss to be hitting, and then they enter the market. So I will label my faker zone right there, and then I'll use my arrow to indicate areas where I'm having liquidity, which is area resistance. So I have that, I have that, I have that, and I have this one right here also. So now I've labeled all this stuff. Let's run down to lower time frame. And all right, so the next thing next was price was also pulling back with a trend line. Okay, so we have our trend line liquidity right here, right? So that shows that is a drawn to liquidity. So my draw to liquidity is here, and the next target for my draw to liquidity will be the swing low right here. And yeah, that was the one that took out. Oh, that wasn't the one. I can still target right here, but price is fractal. You can do anything. You can decide to pull back again. All right, so we run down to 12-hour time frame, and right here this is my 12-hour time frame. So these are what the area of liquidity faker zones, and from 12-hour let's run down to 8-hour time frame. And on my 8-hour time frame, I got to see my order block right here, right? But not still clean, because I don't like seeing something like this. Okay, I still need a confirmation, even though I know this is my failed high. So run down to 6-hour time frame, and this is where I have it printed very clean and clear. That is my order block right here, and you can see where it is right there, 6807.792. So my failed high gave me another block, and that is on my 6-hour time frame. So right there is where I had my entry. So you can still define the 4-hour as a supply zone, which is the last candle before the impulsive move lower that gave me imbalances, right? And then next thing was that I have inducement right here, just an area you think price balance that mitigated other blocks. So we have inducements right here. So from a higher time frame, this the demand was talking about, and we see that it was violated, right? And this is not a valid area right there. So faker zone, change your character, break the market structure, supply, and we have boom. That is it. So I have my first order right here. I took that off, and I waited for a confirmation entry to take another trade. So we are already seeing the market and how it played out. So I don't even also want to talk about KML, because I would like to still plot KML right here as my confluence also, but I would not like to talk about that. So we have KML right here, but this I would say this is a valid area where I would call a KML. Now we can see that price traded to fill a fair value gap. So it shows that you're having a valid area because you are not in line with liquidity. So we have fill on fair value gap, and right here this is another block, right? So another block becomes what? A breaker block, right? So that is another confluence and confirmation right there. So my entry was right here, right? So like a confirmation entry. So I will show you guys how I took my confirmation entry. So on the 1 hour right here, when price tapped this area, we had a other block right here, and it was violated. So we have that is called as a supply and demand flip, right? So right here is my area, and we have high right here, we have low, and that low, that was where we had a break in market structure. So I will call that an offer, known as the order flow realignment, and you can see how price traded backwards to tap that area, and I think that was where I had my entry. Nope, not there. But then that is also a confirmation entry. So after price tapped there, we have a trade lower and gave us a break right here, and this was where I had my order entry. So we can still run down to our 30 minutes, and we'll see right here and also right here. So this was where I had my entry, and as a confirmation entry, so we have inducement right here also. So we have break of structure right here. So it is very is a nice setup, is a nice analysis, and we can see how far it has gone and how I am swinging this trade right now, right? So I hope you learned something from this trade, and I hope it's gonna help you a lot. So first, what I would like you to do for me is to go to my Facebook page. You can follow me on my Facebook page. I'll be happy to see more followers, and I'll keep on dropping my content and every other stuff, because that is where I post a lot of stuff on what is it called, Facebook. And I would like to you guys to see this, and this is where I explain this a lot. So right here I say that a change of character means a violation of an order block that was supposed to continue a structural trend. When a change of character occurs, that means that there is a cause of that violation. The cause of that violation is the occurrence of an order block, which is an opposing order block. To confirm a structural change, you have to see a two structural break, then wait for a pullback to the origin of the other block that violated the structure and caused a change of character. This is what I understand has a change of character, not just any break. You are marking the wrong change of character. Okay, most times you are marking a wrong change of character. So right here, the change of character. So in this case, you get to find a supply to demand flip or a demand to supply flip, and then I'll take blocks. So thank you guys once again, and I hope you guys get to learn a lot from me, and yeah, so see you guys next time, and be safe.